A major issue in financial reporting is the recognition of asset impairments, and sometimes the asset impairments reverse. Let's think about how this works with an example. And so that you can see the entire transaction, I'm going to go back to 2015 when a company buys some equipment for $250,000. It was expected to have a useful life of 5 years and a residual value of $50,000, so the depreciable amount is $200,000. And with depreciation on a straight line basis, that is $40,000 per year. Let's think about what the journal entries would be over the first couple of years. On the 1st of July, we'd recognise the asset, $250,000 in cash. And at the end of 2016 and the end of 2017, we'd recognise depreciation and accumulated depreciation of $40,000. So by the time we get to 2017, we can see that the asset has a book value of $170,000. Started off at 250, minus 40, it's now 170. But unfortunately we see that the recoverable amount, which has been determined on the basis of fair value, is only $150,000. So that means that we have a book value in excess of the recoverable amount of $20,000, and we need to do an asset impairment. When we do that, we'll have to revisit the useful life and residual value, but we're going to leave those unchanged. So to do the impairment, we recognise an impairment expense of $20,000 and an accumulated impairment of $20,000. The accumulated impairment is a contra account which goes against the asset in just the same way as we have accumulated depreciation. And you can see that we now have the asset recorded at a cost of $250,000 minus accumulated depreciation $80 minus accumulated impairment $20, and the asset now has a book value or a carrying amount of $150,000. Let's move forward another year to the 30th of June 2018. We now find that the asset has a fair value calculated on the basis a recoverable amount calculated on the basis of fair value of $135,000. And during the year 2018 would have had to recognise depreciation of $33,333. Please note that the depreciation was reduced because we actually had the impairment. So that reduced the depreciable amount, didn't it? So let's think about what happens now. Well, what we can see on the left of the screen is what's recorded in the financial statements now. We started off at $250,000, we reduced it by depreciation of 40 and then another 40 and an impairment of 20, which gives us a book value of $150,000. We then take off the 2018 depreciation, which gives us $116,667. Now we can see that the book value is now less than the recoverable amount, which was determined to be $135,000. And that would suggest that we should do a reversal of the impairment. And we need to be careful when we do asset impairments because there are constraints. Now, one of the major constraints is that you can't reverse an impairment to an amount that it would be higher than what it would have been recognised if the impairment hadn't been recognised in the first instance. So that's what I'm showing on the right hand side of the screen. If there hadn't have been an impairment, would have had 4 years of depreciation at $40,000 and it would have a carrying amount book value of $130,000. Critically, this $130,000 is less than the new recoverable amount of $135,000. What that means is that we can only reverse the impairment up to $130,000, not $135,000. That's because we cannot reverse an impairment so that the carrying value of the asset is more than it would have been if the impairment hadn't occurred in the first instance. If you want to think carefully about this, what this is really focusing on is the fact that just because you had lower depreciation because of the impairment, you can't let that result in a higher carrying value for the asset. So when we do the reversal of the impairment, we can increase the book value up from 116,667 up to 130,000, which is what the book value would have been, and our journal entry to do this is to reverse the impairment expense, 13,333, and we reduce the accumulated impairment by 13,333. Thank you.